Hello, everyone. Thank you for joining us today for our Digital Energy Forums. We're going to give it another minute or so to allow some more folks to join, and then we'll get started. So we'll be back in a minute. Hello, everyone. Thank you again for joining us today for our Digital Energy Forums. I'm just going to make a few quick announcements before we get started. If you have any questions at any time during the presentation, please feel free to submit them in the questions box, which is on the left-hand side of the screen. We'll answer as many of these questions as possible during the presentation at the end, but if we don't get to something, we'll follow up with you directly by email. At the end of the webinar, you'll notice a survey pop up on your screen. We'd really appreciate it if you could let us know what you thought of the presentation and any ideas you have for future webinar topics. And finally, we will be making the slides and recording available after the presentation, likely sometime early next week. For today's presentation, we have three speakers: Rick Margolin, a senior natural gas analyst at Genscape; Hannah Burke, a product manager of natural gas at Genscape; and Eric Norland, executive director and senior economist at the CME Group. And with that, I will hand it off to Rick, who will kick things off for us.
Okay, well, thank you everybody for joining us today. We are going to do a deep dive into the Mexican natural gas market. This is a market that has become of increasing interest for folks on both sides of the border. For U.S. market participants, it's been interest to get a better sense of how much gas is going to flow out of the U.S. market into Mexico. It's being viewed as a intriguing source of growing demand for U.S. gas. And then, of course, there are many market participants that are very interested in intra-Mexico dynamics. It's a market that is being liberalized through government reforms. It's opening up to foreign direct investment, and it's a market where gas demand has been growing at pretty impressive rates over the recent years, so there's a lot of excitement about that. And as a result, Genscape is investing more time and attention and resources into deciphering that market. So we want to talk about that today. We're going to kick off. Eric Norland with the CME Group is going to go ahead and kick things off. He's going to be talking a little bit about what's happening with LNG, and that's going to be an important thing to keep into consideration as a potential to siphon off supplies that could go down south to meet Mexican demand. So after Eric talks about the LNG, I will go ahead and dive into Mexico. We're going to start by looking at the Mexican supply and demand balance. And what we're going to see is that Mexican domestic gas production has started to decline at exactly the same time that Mexican domestic gas demand has increased. So that growing imbalance is one of the main drivers behind increased exports to the Mexican market. That's also been abetted by the price declines associated with U.S. sourced gas. So we're going to go ahead and talk about that and try and figure out what's been the main drivers of that, because that's going to be very important to keep in mind when forecasting future exports into the Mexican market. But as we dive into that, we're going to see that trying to get an accurate estimation of timely cross-border flows has become increasingly difficult because of infrastructure changes that have occurred at the border. And so that's been a very big issue for us here at Genscape, something that we've felt justified investment of resources. And so Hannah Burke our product manager for proprietary monitoring, is going to talk about the monitoring activities that we're doing, not just at that net pipeline that crosses the border, but more broadly what we're doing with things like Texas intrastate storage and other ways to decipher intrastate activity to help you get a better estimation of timely flows. She's going to talk about how we're doing that and how our modeling results have performed against our benchmarks, such as EIA. And then I will take it back over and we'll try to put all this together into a forward look for future Mexican supply and demand and the role of U.S. gas in meeting those balances. So with that, I'd like to hand it over to Eric. And Eric, it's all yours.
Thank you so much for the introduction, Rich. Before I really get into LNG and its potential impact on natural gas, I am required to make a very brief disclaimer, which is to say that CME Group, which is the world's largest derivatives exchange, provides a neutral ground upon which both buyers and sellers can hedge their risk and provide liquidity to the market, and so therefore I cannot make and will not make any trading recommendations with regard to what to do with natural gas futures or options, etc. So I think the good news and the interesting news with respect to LNG and its potential impact on Mexico is that so far it appears to have had relatively little impact on prices. Now, as many of you know, the U.S. has begun to export liquefied natural gas through a terminal called Cheniere-Sabine Pass on the Gulf Coast. That terminal opened very, very recently, and it's had its first shipment of LNG towards Brazil a little bit earlier on this year. And since then, the terminal has been operating most days, I'd say at a fairly modest capacity. So the terminal has a theoretical capacity that's roughly equivalent to about 2.3% of U.S. production. And so when I say roughly, what I mean by that is I'm using the average production level for natural gas over the course of 2015 in the denominator. And so 2.3% of U.S. production does sound like a potentially very large amount, but Cheniere-Sabine Pass on its better days has been operating at maybe a quarter or a third of its capacity. So its actual exporting of natural gas has been closer to maybe 0.6 or 0.7% of the U.S. total on the days in which it's active, which is roughly half or maybe more than half the time. And then there are other days in which there's no shipments going out, so it's obviously at zero. So the impact on natural gas prices thus far seems to have been relatively modest. Now, as I'm sure everybody's aware, natural gas prices have been in a bear market for a long, long time, really since 2008. They've come down maybe about 80% or more in terms of price. But what we do think LNG has the potential to do over time is to put a floor under that natural gas price, in part because natural gas is very, very sensitive to relatively small changes in supply and demand because both demand for natural gas and supply can be both very, very inelastic. And one of the jokes people tell about natural gas is that if you have one molecule too many, the price goes to zero. And if you have one molecule too few, the price goes to infinity, which of course we know is all an exaggeration. But it does nevertheless sort of highlight the very volatile nature of natural gas prices, which are actually the most volatile instrument that trades on any of CME Group's exchanges, even more volatile than, for example, than crude oil. Now, the Cheniere-Sabine Pass facility is the only one that's currently online, but there are other facilities that are scheduled or may come online starting next year. Now, the one facility that might come online next year is a very, very small facility that probably won't dramatically change the picture. But as we move into 2018, 19, or 20, there's a potential for many other facilities to come online and potentially begin exporting natural gas or liquefied natural gas, which could create another source of demand that would in fact compete with Mexico as a source for natural gas exports. But I think the good news for anybody in Mexico who's a buyer of U.S. natural gas is that LNG exports are very, very expensive. So we measure the price of natural gas, of course, in dollars per MMBTU. So currently the U.S. price is around $2. In fact, my spot price here shows it at 226 at the moment, which is actually significantly higher than it was in the very recent past when it got down to around 160. But the price in Europe, depending on the market, and there's a variety of different markets, but using Germany as the benchmark, is roughly around $4, and in Japan it's up around $6. So exports to Europe and Japan, we think probably add about maybe $4 to $7 in shipping costs beyond the U.S. price. So at the moment, we don't think that Europe or Japan will be buying a lot of LNG from the U.S. Now, that said, their prices, or prices of natural gas in many other countries in the world, are benchmarked, oddly enough, to Brent crude or to other crude oil benchmarks, as well as local benchmarks for natural gas, which are also very volatile. So if their price goes up relative to the U.S. price, that could create a lot of demand for LNG exports towards those countries that might be fairly modest at the moment, but has the potential to grow in the future. So natural gas, I think, is sort of a unique commodity in the sense that it never globalized. It really has remained a very regional market, in part because of the very high cost of LNG shipments across oceans to different continents. But now that more terminals are coming online here in the United States, the natural gas market will slowly begin to globalize, at least to some extent. And so if natural gas prices around the world go higher relative to the U.S. price, that has the potential to put a floor under U.S. prices and potentially have those prices go higher. But nevertheless, it will always be more expensive to ship gas to Asia or to Europe than it will be to pipe it to next door Mexico. So the potential for LNG to have a dramatic impact on U.S. exports to Mexico, I think, is relatively modest. So with that in mind, I will pass things back to Rick and to Hannah to talk about more details of natural gas and its shipments to Mexico.
Okay, thanks, Eric. So hopefully that starts to bring some perspective as to the interplay of Mexico with foreign markets. Obviously, the U.S. being the primary source, although Mexico has been interconnected to the global market. It historically was an importer of LNG. We'll talk about that here in a bit. But looking at the interplay between Mexico and the United States, what we've seen is increasing exports of U.S. gas to Mexico. And this has really been driven by the growing imbalance between supply and demand within the Mexican market. On the left, you can see the history of Mexican gas production by producing region within Mexico. And obviously the chart shows that in the early part of the 2000s, Mexico had a nice production growth. But as we got to the latter half of the first decade there, production started to plateau and then enter a period of pretty steady declines. There was a brief resurgence in the 2013-2014 period, but Pemex, Mexico's state-run E&P there, just recently announced production figures for 2015 as well as the first quarter of 2016, and those numbers show that they have resumed production declines. There's many reasons for why these declines are occurring. Your traditional dry gas basins have been basically seeing aging and declining. You have seen a lack of investment into new exploration and production and infrastructure. Mexico's E&P environment has been largely, almost exclusively dominated by the state-run Pemex. Now that's undergoing changes, but until that change is really in full effect, there is an aging infrastructure and lack of investment there. And Pemex is financially kind of up on the ropes with some pretty hefty debt obligations that has contributed to that lack of investment. And then more recently, we're seeing lower volumes of associated gas coming off of Mexico's crude production as a result of the decline in global oil prices. Now, all of this has been occurring at the exact same time that the chart on the right demonstrates demand within the Mexican market has been on the rise. We've seen very impressive growth in Mexican demand for natural gas. And there's really, as you can see here in the chart, there's really two main drivers. Mexico's industrial demand for gas as well as the power sector demand for gas. I will note that there is some residential and commercial demand for gas, but in the context of this chart, it hardly even shows up as a sliver. It's less than a BCF per day per year. So there's really these two main components, and you can see that both of those components have been growing at the exact same time. So what's driving that? Well, it's power and industrial. On the power side, you've got two main forces that are increasing the demand for natural gas. First of all, as you can see demonstrated by the chart on the lower right, total demand for power within the Mexican market has been on the rise. The main driver of total demand for power, regardless of fuel source, has been Mexico's industrial sector. This is going to be a recurring theme throughout discussions of the Mexican gas market, the industrial sector. It's very important to understand how we got to where we're at today. It's very important when building forecasts for the future. So that has been a main driver of demand for total power. Within the power sector, Mexico has changed its fuel mix. Mexico used to have a pretty hefty percentage of generation come from fuel oil, and I apologize, it looks like the chart may be producing an error. That for oil, that should say 16%. And natural gas is showing that it now accounts for well over 50% of the current generation mix. Basically, natural gas's share of the fuel mix has grown by intentionally displacing oil from the generation mix. This was something that the Mexican government initiated many years ago for reasons of establishing price stability, certainty, reliability, as well as environmental considerations. So industrial demand for power has been driving power growth, and as power growth has been occurring, natural gas has been picking up a bigger and bigger share of what is generated. And that is going to continue to be a theme moving forward. Power growth as well as natural gas gaining increasing market share. As you can see with the pie charts on the left, there's still other fuels that gas is going to be able to displace from the market. In 2016, 2017, and early part of 2018, there are going to be the remaining fuel oil plants are basically going to be converted over to natural gas or retired and replaced with new gas-fired generation. So, as Mexican production has been in decline and Mexican demand has been on the rise, we have seen Mexico become more dependent on meeting that demand with gas from the United States. This also has been facilitated by the price decline of U.S. sourced gas. This has been a trend that's kind of been in development for the last 4 or 5 years, as you can see. Part of this has been facilitated on the U.S. side by increased expansion to move more molecules into the Mexican market. We've had a couple of expansions that beefed up some of the Tennessee and El Paso systems. But as you can see over on the right, the ramp up really took a large incremental shift here in just last year in 2015. There was a new pipeline out of southern Arizona called the Sierrita system that takes gas off of El Paso, but more importantly is the introduction of the Net Mexico system in January of 2015. Net Mexico picks up gas out of South Texas's Agua Dulce hub and ships it south into Nuevo Leon and ultimately to states farther south. It's a system that has the capacity to move 2.1 BCF per day of volume. We're not necessarily seeing that much gas moving at that time right now. Right now we're seeing volumes anywhere from about 1 to 1.3 BCF per day. But understanding the presence of Net Mexico in the U.S. export market to Mexico is very, very important. As you can see on the chart on the right, well, let me back up and say that right now at Genscape, we're estimating that there's anywhere from about 3.3 to 3.5 BCF per day of gas moving out of the U.S. into Mexico. And with net flowing well in excess of BCF a day, that basically right there implies that nearly 30% of the volumes that are going out of the U.S. are being moved on this one pipeline alone. The challenge that market participants have when trying to come up with daily estimates of how much gas is leaving the U.S. is the fact that the net system is not obligated to report timely pipeline volumes the same way that other pipeline systems are in the United States. And this is because net is considered to be an intra-state pipeline, not an interstate. And so what this means is that over time, the ability to estimate timely exports out of the U.S. using interstate pipeline data alone has become increasingly difficult. You can see that back in 2011, interstate pipeline data was able to get you in excess of 80% of actual volumes. But today, the interstate pipeline sample alone accounts for less than 56% in 2016. So that right there sort of points to the need to get better timely information on intrastate systems like NET. And so this is something that we are actively involved in, and Hannah's going to talk about in detail here in just a moment. But before handing it over to her, I want to address that we often get the question, well, there are some interstate systems, NGPL and Tennessee, that deliver gas into NET, so why can't you just use those? Why worry about monitoring NET when you have two interstate systems that deliver supply to NET? And the answer is that, first of all, those are not the only pipeline systems or gas supply systems that feed NET. They're just 2 of 9 points that NET can draw supply from. And it's really important because it speaks to the remarkable interconnectivity of this NET pipeline system to alternative sources of supply besides just interstate points. The other reason that this is something that we didn't really want to do is because we have often seen the correlation between NGPL and TGP deliveries to NET fail to correlate well with total NET activity. There have been many glaring instances of this, things like when there's maintenance on NGPL or TGP, you can see their deliveries to NET drop, whereas at the same time, NET volumes stay relatively steady or even increase. We have here 2 pretty pronounced examples of this. In the top chart, what you can see are NET volumes on the top line back in May of 2015, a couple months after the pipeline came into operation. And you can see that those total volumes do not correspond terribly well with the volumes received from those NGPL and TGP systems. What we later discovered was that this was a product of other intrastate interconnects tying into the NET system, and basically one of our first most glaring examples of why it's tricky to rely on just NGPL and TGP to estimate total NET volumes. The other more recent example is shown there in the bottom right. This was actually 2 weeks ago. There were market reports that a very large pipeline system within Mexico called Los Ramones II had come online around April 12th. Everybody is waiting very anxiously for this Los Ramones II system to come online because not only is it a pretty large system, but it's going to be fed with gas out of South Texas via the NET pipeline. So when it comes online, we should expect to see some sort of incremental increase in NET cross-border flows. There were market reports that Los Ramones II came online April 12th, and we believe that those market reports were based on an observation of NGPL deliveries to NET reaching record highs. And that did, in fact, happen. However, as you can see on the top yellow line, that did not correspond to an observed increase in NET exports. We became very suspicious of these market reports immediately. They contradicted our expectations for when Los Ramones II is supposed to come online. Our expectations are based on frequent conversations that we have with folks that are either involved in the development of Los Ramones II or are involved or will be potential off-takers from that system. What we discovered here was that NGPL deliveries to NET actually did reach record highs for a rather unfortunate reason. Unfortunately, there was a pipeline explosion that was fatal on near the tailgate of a processing plant that feeds gas into the Agua Dulce hub that feeds NET. And so the reason NGPL deliveries to NET increased so quickly was basically to offset those volumes that were lost as a result of that pipe explosion. As you can see, a couple days later, those NGPL deliveries came right back down. And so all of this sort of demonstrates why it's really important to use monitored activity instead of just relying on interstate data alone. And this is something that Hannah is spearheading, that she takes care of, and it's not just for monitoring cross-border flows, but monitoring things like other intrastate systems. So with that, let me hand it over to Hannah to talk about what we're doing in that arena.
Thanks, Rick. So the problem with intrastate deliveries to NET pipeline is really indicative of the big black hole we see in Texas. It's a big gap in our market knowledge, and pretty much whenever you're going to see a big gap in market knowledge, that's something Genscape's going to try to monitor. The first thing we tried to tackle with our monitoring of this is intrastate storage and exports to Mexico and Texas. We do that through two primary technologies in natural gas. The first is infrared monitoring of facilities. As you can see in the animation on the right, we get pretty granular data. Images come in between 5 and 10 minutes, and from that we can build a pretty dynamic view of what's happening at that facility. You'll see as these units, these are compressors at Markham storage facility, as these units turn on, they get bright hot, and then as they turn off again, they cool down and become dark. The other technology we use is electromagnetic monitoring of transmission lines. The units that we use, we place around transmission lines feeding compressor stations for natural gas. This EMF signal that we get can be directly correlated to the power consumption at that compressor station. This is the primary technology we use for NET monitoring, as we have 4 of these EMF monitors around one of the compressor stations just above the border. You can see in the graph below, this is the data we get from our EMF monitor and how that correlates to our daily scaled actuals for the EIA. For Texas storage, we use a combination of these technologies at 7 target facilities across the state. Our sample of Texas storage is about 68%. On top of the 11% we see publicly, that gives us a sample of around 79% of total working gas inventory in Texas. For each of these facilities, we calibrate our raw observations to the Texas Railroad reported inventory, from which we can get a daily estimate of activity at each site. These daily facility values we use in a Texas storage estimate. Some of our preliminary results are on the right here. You can see for every month that we've estimated, our proprietary data have given us a much better estimate of Texas storage than what's available with just public data. For monitoring of total U.S. exports to Mexico, we use our net flow values in aggregate with the publicly available data to regress against the monthly EIA values. From this, we're able to determine an estimate daily. In the graph on the bottom right, you can see how our estimates by month have performed. We try to keep our error rate below 5%. Every month we reevaluate our model and our assumptions for both net and for total Mexico. As the system continues to develop, we see things change. So when the downstream Mexico environment changes, we'll see our assumptions need to react. So every month we are reacting to any changes in the infrastructure and adapting our models. Over the course of 11 months, we've seen an average absolute error of only 2%. So we're pretty proud of this product, and our estimates have been performing really well so far.
Okay. So obviously we feel that monitoring these intrastate systems is critically important. They help us get what we believe to be the most timely and accurate estimate of exports leaving the U.S. for Mexico. And what this also does is helps us sort of get a bead on when new projects come online, so in Mexico. So for example, talking about that Los Ramones II project that's going to move gas throughout Nuevo León and down south to Guanajuato, we expect that we will be able to see when that system comes online with an increase in monitored flows on net. So with that information, as well as our understanding of the Mexican market, we are building out a forecast for what the U.S. should be exporting to Mexico. So the way that we build out our forecast is we start with a look at the intra-Mexico supply and demand balance. To do that, the foundation of that is the Mexican government forecasts that are produced by SENER. And then based on their forecasts, we try to make assumptions of whether we agree or disagree with what they are showing. On the supply, well, let me back up and say that overall, our forecast tends to come out on more of the bullish end with regards to exports. And that's for a couple of reasons. First of all, we tend to question whether the Mexican government's estimates of production within Mexico rebounding is realistic. Those estimates are pretty optimistic that there's going to be a robust rebound starting in early 2017, and there's reasons why why the Mexican government is predicting that. They are liberalizing the market to attract foreign investors. They are holding auctions for leases to bring foreign producers into the market, but there still remain some very serious questions as to the quality of the productive resources. They're about infrastructure to move those production volumes into the market, as well as the fact that a couple of their auctions have not necessarily received the level of interest that was anticipated. Now, we are not saying that production is going to continue to decline necessarily at the rate that we've seen in recent months and years, but nonetheless, we tend to come out a little more bearish on Mexican production recovering at the rate that the Mexican government is forecasting. Also, we tend to be a little more bullish on the prospects for intra-Mexico demand. We believe that there is and has been for a long time a lot of sort of latent pent-up demand within the Mexican market that is a product of inadequate infrastructure, inadequate access to reliable gas supplies, inadequate access to either reliable electric supplies or no access to electric supplies as well. So when we are making our forecast, we're starting with those sort of estimations. And then what we do is we really try to get down to the most granular level possible. On the demand side, what that means is we look at projects that are being proposed, either fuel oil conversions over to gas, or new gas plants being developed, new pipelines being developed, new transmission projects. And rather than just simply saying, hey, there's going to be a new pipeline project, so let's take that pipeline's estimated capacity and build it into the forecast, what we really try to do is understand who is connected to that pipeline. Why is that pipeline being built? It is very much the case that it appears that there's a potential overbuilding of capacity in the Mexican market, both on the gas and power generation sides. Case in point, right now there's over 6.5 BCF per day of pipeline capacity that is proposed to move gas across the border. Now, we don't think that anywhere near that much of that capacity is going to get utilized, let alone built. But we do see that a lot of the projects that are being built in Mexico are directly tied to concrete projects on the demand side. Things like auto manufacturing. Ford, Volkswagen, Audi have all, Kia have all either announced or already begun breaking ground on major manufacturing projects within the country. Kia is going to be one of the major consumers of gas off of that aforementioned Los Ramones II pipeline. We also know that there are other industries that have announced that they are relocating or opening operations in Mexico. Sharp and Sony both have announced major electronics manufacturing facilities that are set to open in 2017. So when we try to track all of these announcements and timelines as best as possible and tie them to certain projects, and then we try to move those progressively upstream. We try to answer the question, where are these folks going to get their gas and power supplies from? In instances where those projects ultimately radiate or connect to U.S. pipelines, we go ahead and we build them into the forecast. So the ones that we have in our forecast you can see highlighted here, but just be aware that there are many more projects that are being proposed and may very well likely be developed within Mexico, but that will probably see relatively low rates of utilization, at least in the early years. So taking Los Ramones II as an example, it's going to be a system that creates about 1.8 BCF per day of capacity, but we're not expecting it to flow at that level right off the bat. But nonetheless, we do see a very real circumstance where by the end of the 5-year forecast period, flows are exceeding 5 BCF per day. So to recap, as Eric mentioned, that it's watching what's happening with regards to U.S. LNG exports is very important to get an understanding of Mexican access to U.S. supplies that will play a role in both the price and availability of the U.S. supply available for exports to Mexico. And watching that's going to be important because the Mexican supply-demand balance has grown increasingly tight over the years with demand outpacing domestic supply. That plus low prices for U.S. gas have led to an increased reliance on Mexican demand for U.S. natural gas, leading to an increase in exports, which itself has been facilitated by some capacity expansions. However, many of those capacity expansions, both in recent years as well as going forward, are moving on intra-state systems that make it, because they don't report in a timely manner, it makes estimating daily exports increasingly difficult when just relying on interstate data alone. And so for that reason, we are actively monitoring movements on intrastate pipelines, intrastate storage systems, etc. But all of this sort of comes together, and with our expectations of the future Mexican market, we are expecting that exports growth will continue, potentially exceeding 5 BCF per day within our 5-year forecast period. So at this point, we'll take any questions that you have. I believe there's the question box within the interface. So give us just a minute or two. We're going to go on mute to look at some of the questions, and we'll be right back to answer those. Okay, so we have a couple questions, and so the first one's for Hannah. Do you have a sense of how your monitoring technologies will perform when and if infrastructure in Mexico comes online and changes sort of the shift, causes a state shift in demand for U.S. gas?
Yeah, so our monitors at the net compressor station are tracking the activity that's physically occurring at that compressor station. So with any addition to downstream infrastructure, any changes, we'll still see an accurate signal of what's moving into Mexico. We don't expect to see too much infrastructure change on our end when that happens. But like I said earlier, any changes to the system we're constantly monitoring and adapting to. But due to the physical nature of what we're observing, we don't expect our systems to require much adjustment.
Okay. The next question is, excuse me, any chance Mexico will have a shale fracking boom? So the chances are great. The Eagle Ford shale is not confined to Texas. In fact, its geology extends well south into the middle of Mexico. So from a resource perspective, northern Mexico has the right kinds of, at least the prospects for the right kinds of resources being there. Also, they have access to the same Gulf of Mexico offshore fields that many U.S. producers are tapping into. So from a resource perspective, northern, northeastern, and Gulf of Mexico does have a lot of potential. I think the big question as to whether or not the boom happens is how comfortable foreign participants or the development of Mexican-based E&Ps, how comfortable these folks start to feel getting into that market. I do believe that it's going to take a little time for folks to get comfortable with the new regulatory regime. I think it's going to take Mexican regulators a little time to get up to speed, so to speak, because this is fairly new for them. I mean, the Pemex has been running the show for a long time, and so you've got new agencies out there like Senegas that are now taking over Pemex's pipeline infrastructure and obligated, responsible for managing that. So there's likely to be growing pains with that. And I've heard that there are some, as you move farther south into the country and farther inland, there are some questions about the resource potential there. So, but I think taking a step back from a pure physical perspective, I don't think there's a whole lot of questions that the resource is there. The Mexican government itself is rather bullish on the prospects for domestic production to grow again, but there is certainly risk in that. Let's see here. So next question is if we have a view on the restructuring of the Mexican wholesale electricity market. Is it progressing as planned? So the view there is, at this point, it's sort of a wait and see. The market did open up to day-ahead trading in January. It started in the Baja market, and it's so far, it seems to be going really well. They're posting daily power prices. They're posting, very frequent generation volumes. It's, for all intents and purposes, it looks very much similar to what U.S. power traders are accustomed to. So, have not heard about any major problems with that. From a gas perspective, well, first of all, sort of stepping back, that's as that rolls out through the rest of the country's power markets, we'll learn a lot more about how that's going. But from a gas perspective, we anticipate that creation of that day-ahead power market may create a little more volatility in exports from the U.S. to Mexico. We anticipate that we'll start to see exports demonstrate a little more sensitivity to things like weather and prices. But again, the proof will be in the pudding and time will tell. So a couple other questions. With regards to Los Ramones II, when do you expect it to come online, and how much do you think it will flow? So again, as mentioned, Los Ramones II is the southern extension of the Los Ramones I pipeline, which itself is fed by NET. I mean, NET was basically created to serve the Los Ramones pipe system. Los Ramones II was originally supposed to come online in January or February. The project has been repeatedly delayed for a variety of reasons. Recently there's been some political battles with the new governor of Nuevo León and some of the major industrials like the Kia Motors facility. We've also been told that there's still work being done on the system to tie in interconnects, etc. So based on conversations that we've had, as well as statements made by Senegas, which is effectively the gas grid operator down there, and that we've been able to confirm with project stakeholders, is that everybody's kind of looking for Los Ramones to come in either late May or early June. But of course, as we've seen, that's certainly subject to delays, but right now we're not hearing any timelines later than that. With regards to how much it's going to flow, it's really challenging to estimate. Again, as I mentioned during the presentation, we try to take a point-based approach to forecasting flows. So we know that there are two industrial parks that there are two industrial parks that are already existing that will tie in to Los Ramones. We have a pretty good sense of who the consumers within those industrial parks are. We know what some of the downstream pipeline interconnects look like, which ones are built and which ones are not. And we know what some of the other demand points along the system are or are going to be. So based on this, right now in our forecast, we are expecting to see the first incremental volumes when Los Ramones II comes online jump about roughly 300 MMCF per day. Over time, we expect those volumes to grow as more consumers tie into the pipeline, as industrial projects get built out, as downstream interconnects to the Pemex system and new pipelines get built out. But initially, we're looking for about a jump of 300, maybe 400 MMCF a day of gas out of South Texas on the NET system. And then let's see here. How much capacity is there to export gas out of the U.S.? How much will be built and how much of it will get utilized? So right now we're sitting on about 6.5 BCF per day of capacity. It is, as I mentioned, we're flowing anywhere from 3.3 to 3.5 BCF per day. So obviously that capacity is not being fully utilized. None of those systems to export gas out of the U.S. are constrained for all intents and purposes. And as I also mentioned, there's at least another 6.5 BCF per day that's proposed to be built in the next 5 years. Now, we don't expect all of that to get built, and of those systems that do get built, we don't expect them to get fully utilized, again, because we don't see the demand on all of the downstream pipes necessarily materializing. But as you can see in our forecast there, we do expect some utilization of these new systems to the point where total exports could potentially exceed 5 BCF per day by 2020. So one last note I will make is that if monitoring daily exports from the U.S. to Mexico is of interest to you, we publish all of our daily data across a variety of different Genscape platforms. You can query it down to the most granular level. You can query it by point of exit or EIA listed state of exit, point of exit, pipeline point of exit. You can aggregate to state of exit, or you can just look at the grand totals in aggregate. We also publish a weekly report every Friday. It's going to come out here in a couple minutes, where we basically summarize what the last week of flows did, why, and what future flows look like based on major developments within the market, either on the infrastructure, political, or market-based side. So if this is all of interest to you, I strongly encourage you to check that out, as well as if you're trying to balance Texas or interested in Texas intrastate flows, look at our net volumes as well as our Texas intrastate storage activity estimates. So with that, we'll wrap it up, and I want to thank everybody for joining today.
Thank you.